Thank you very much, everyone, for joining our first edition of the Liftoff webinar series, the first one of 2021. I want to thank everyone for taking some time out of their calendars during this busy beginning of January to join us today. Hopefully everyone is navigating their way through the pandemic still, and everyone is safe and well as we continue to find our way back to some version of normalcy. But we're still glad to be able to convene folks and to be able to talk about some issues that may be able to help you going forward and show you what the LIFT membership is all about. My name is Joe Steele. I'm the Senior Director of Communications and Legislative Affairs with LIFT. A few housekeeping items before we get going. If you can put your phone or computer on mute, please do so. We are recording this session. Would love to eliminate any background noise as much as we can and not disrupt the presentation going forward. If you do have questions during the presentation, please go ahead and send those to me using the Zoom chat function. You can send those directly to me, Joe Steele, the administrator of the meeting or organizer of the meeting, and I can facilitate the Q&A afterwards. So this webinar, as I mentioned, is being recorded. We will post it on our LIFT website at lift.technology a little bit later on. So if you registered and you thought it was interesting, or you weren't able to join, or want to invite some other people to listen in and see what was said here today, you can be able to forward it to them later on. So I want to take a few minutes to talk a little bit about LIFT. We are one of 16 of the National Manufacturing Innovation Institutes, and we are driving American manufacturing into the future through technology and talent development. We understand that smarter manufacturing is the future of our economic and national security. So the region and the country that tackles smarter manufacturing first will come out ahead, and our goal obviously is for that to be the United States of America. So at LIFT, we believe we are solving the manufacturing equation. As I said, we're driving American manufacturing into the future through technology and talent development. So we do that through connecting materials, processes, systems, and talent. We know that the innovations and talent are fantastic. To take those things into the marketplace, get them into the hands of the warfighter as soon as possible is great. But we also need the talent to go ahead with that, to make sure that we have the talent in the workforce that can work with these new innovations on the floors to continue moving ahead with our manufacturing ecosystem. So at LIFT, we have two programs that we're running. First is Leading Innovations for Tomorrow. That is our technology program. And our talent program is Learning Innovations for Tomorrow. So put those together and we have LIFT. I'll point to Leading Innovations for Tomorrow, which is the technology program, where we are really doing the work of connecting the materials, processes, and systems. And you can see the four pillars of activity that we focus on. You can see some work going on in our high bay, and our high bay located here in the city of Detroit. We invite you to take a look at our high bay. Come visit us next time it is safe to do so. If your travels bring you through Detroit or to Detroit, I want you to come and check us out and take a tour. In the meantime, you can visit our website at lift.technology and take a virtual tour of our facility. We're in the process of actually updating that because we've taken this time as we've been shut down a little bit to rearrange some things and add some new equipment. So we're looking forward to showing that off in the near future as well. So our four pillars, as you see: integrated computational materials engineering, agile and smarter manufacturing, advanced alloy and process development, and multi-material joining, really pulling from our history in materials research and connecting that with smarter manufacturing. So we're putting together the pieces of connecting materials, processes, and systems. A little bit more deeper dive into the what goes into each of those pillars. I won't go into that because you are here to hear from Capital Edge. So just take a look at that. And again, if you have any questions about what we do on the technology front, you can feel free to reach out to us by visiting our website at lift.technology. On the education front, the Learning Innovations for Tomorrow, we are focused on creating new learning tools, pathways, and venues. So we have the Ignite Mastering Manufacturing curriculum that we actually provide to students in our LIFT Learning Lab in our facility in Detroit. Students are also able to take part in this curriculum around the country. It is available to students and school districts to utilize. So we're excited to have that available for them, to really expose them to the world of advanced manufacturing. Let them know that it is an exciting and cool career to be a part of. So they take part of the Ignite Mastering Manufacturing curriculum. It's a 3-year program. Take part in that in our LIFT Learning Lab, which you can see on the screen as well. It sits perched high above our high bay. So not only are the students coming to learn about advanced manufacturing, they can actually look out the window and see what is going on our high bay floor. We also offer world-class certification programs. We have certification programs running right now. Even, we're in the middle of COVID, but we're taking precautions to make sure everyone is safe and we can run these programs safely. So welding and CNC are going on right now. You can register for those at our website as well. And then Operation Next is a program that we're very excited about. It is a program that we developed a few years ago. It really started as a program to provide training for men and women in the military who are leaving the service, to provide some opportunities for them to be credentialed in advanced manufacturing jobs before they leave the service. So when they leave their service, they have a credential in hand and can go find one of those advanced manufacturing jobs in CNC, industrial technology, maintenance, welding, and now robotics. So they're able to leave the military and find an advanced manufacturing civilian job right away. So some more information about those programs here. But again, if you have questions, please reach out to us directly. I did mention that we are one of the 16 National Manufacturing Innovation Institutes. As such, we are a public-private partnership and a membership-based organization. So what do we provide as memberships value? Well, we provide a number of things. We're a trusted advisor with in-house experts and experts across the ecosystem about technology, about talent. We are a technology accelerator, trying to take that technology and advance them into the marketplace and into the hands of the warfighter as soon as we can. We are a technology showcase. I mentioned the high bay, our facility in Detroit, where we show the art of the possible of smarter manufacturing. We're a connector, a public-private partnership, connecting folks in government to the highest levels of industry and education. We bring these folks together and able to connect the dots to encourage them to work together. We are a convener. That's frankly what we're all here doing today, bringing experts together to hear about how the ecosystem can help support you going forward. A talent developer. I mentioned the curriculum and the certification programs. So really from middle and high school all the way to adult learners and trying to upskill and reskill folks. And finally, we are a government partner. Eliminating the barriers of entry to working with the federal government. And really, that takes us to our guests today, our friends and members at Capital Edge. I'm happy to turn the floor over to Sean at Capital Edge as we discuss some of the ins and outs of DoD contracting. So Sean, I'm going to stop sharing my screen and allow you guys to go ahead and share yours and go ahead with the presentation.
Joe, thank you very much. We really appreciate it, and really happy to be here today. Have an opportunity to share a little bit about Capital Edge, but more so about some of the recent updates and staying compliant with DoD research grants and regulations. First of all, Capital Edge is a new member of the LIFT community, so we're really appreciative of this opportunity today to speak and just to be a part of the community in general. So Joe and Addie, thank you very much for everything that you guys have done so far to make that possible. I don't want to take up too much of your time this morning. You guys have two really great folks from the Capital Edge team, Gene and Dan, who are here to chat with you today. I just wanted to say hello and provide a quick overview of Capital Edge, who we are and what we do and sort of how we do it. And then they'll jump right into the presentation and hopefully be able to answer any and all questions you guys have at the end of it. Brief background about myself. I've been in consulting my entire career, working with government contractors, grantees, cooperative agreement recipients from a compliance, accounting, strategy perspective. Gene and Dan have a little more diverse backgrounds, some really cool backgrounds. They bring a lot of experience and expertise to Capital Edge, which we're excited about, and they're two obviously really valuable team members here with a lot of knowledge to share. a little bit about Capital Edge quickly. The thing that I think sets us apart and makes us the leading service provider in the government contracts and grants world is our people. We have, and this slide that you're looking at right now really centers around our people, the expertise that we have, and stems from the experience, obviously. We have collectively about 450 years of experience at Capital Edge in the government contracts and grants, compliance, accounting, business systems world. And our firm is solely focused on that. We are not a typical accounting type firm that has an audit practice and a tax practice. We have about 45 full-time folks, and this is all we do is government contracts and grants compliance. But I promise you, we're still a lot of fun to have a beer with or watch a game with, despite what it sounds like we like to do on a daily basis. So, but our people have gained that experience in a wide range of areas. And as I mentioned, mine comes from the consulting side. But we have plenty of folks who work for the DCA, Defense Contract Audit Agency, Defense Contract Management Agency, as contracting officers through the Air Force and the Army. We have folks who are members of review teams for the government industry, Big Four, some legal experience, engineer experience, civilian agency audit experience. So our team is just incredibly well-rounded and brings a wide variety of experience and expertise to what we do. And what we do is work with contractors and grantees of all different sizes, industries, revenue components, right? So some of our clients are startup mom and pop type businesses or organizations, all the way up to multi-billion-dollar a year in annual revenue. And that revenue can be split all federal or some federal or very, very, very little federal and mostly commercial. And we do that across, as you can see on the slide here, all agencies focus a lot on DOD, obviously DOE, HHS, state, the VA, but we're very much agency, revenue, size, industry, and award type agnostic. We work in the full life cycle of federal contracts and grants. Our team is, as I mentioned, about 45 folks. So we're a little spread out. Our headquarters is in the Washington, D.C. area in Tyson's Corner, for those of you who are familiar. And this map, actually during the last month or so, we have brought on some new team members, which is really exciting. So we're going to shade in the state of Texas and North Carolina as well here. But as you can see, we have folks from our team that live all over the country, but mostly headquartered in the D.C. area. And then we have clients all over the country and all over the world. In my time at Capital Edge, we've had somewhere in the neighborhood of 750 to 800 clients, some of which are repeat folks that continue to come back to us for all their compliance needs and concerns, and some we help get straight pretty quickly, and they're off and running on their own. So, wide range of clients, and obviously, across the entire spectrum of the country. So a little more, very much the full life cycle of contracts and grants, everything from the strategy in terms of, putting together the cost volume and developing rate structures and going after a new award, through the proposal development, performance, obviously modifications, closeout, terminations, anything and everything that occurs between the time that you guys chase down a federal award until that federal award is closed out. Capital Edge has experts in every area to help you guys through the process. So here's a little more about the solution model. Again, strategy, focus on strategy, compliance, accounting, and contract and supply chain. And then the last slide, Dan, that I'm going to touch on is just some of the agencies. These are examples of some of the agencies that we work with on a regular basis. Some of these might look familiar to you. Hopefully a lot of them look familiar to you guys. But I hope this is helpful. And again, you're going to have a great presentation from Gene and Dan today. And again, thank you guys for allowing us to participate today and for putting up with me for 5 minutes. And I'll turn it over to Dan.
Thanks, Sean. Appreciate it, buddy. So the first, kind of content topic today, we wanted to make sure that, just about every attendee that we thought would sign on to this webinar would be a recipient of a research grant or cooperative agreement, or maybe you're a contractor and you're thinking about getting into some of these research opportunities. I can tell you there's a lot of commercial contractors that utilize these for the development of intellectual property and other benefits of just being in the DoD funding space. And so what happened was in the fall, there was a number of regulatory updates as it pertains to grants and cooperative agreements in general. And so my role at Capital Edge is to, keep a tab on these things. I'm part of editorial advisory board for the largest federal grants education institution in the U.S. currently. So I do, 30 to 40 live training events, albeit live over the internet nowadays. I used to like to do them live in person, but, I do about 30 to 40 of those every year, just keeping folks up to date on, what's really going to impact their grants today, what's going to impact their grants and cooperative agreements tomorrow, and what they need to be looking out for in terms of, high risk compliance areas and things like that. And so this final rule really jumped out at us when it was issued in the fall, in that if you've ever heard of uniform guidance, the super circular, this behemoth of regulatory requirements that governs grants and cooperative agreements issued by various different federal agencies, that 5-year update also hit in the fall. So this was really kind of a catalyst for the DoD to go in and make the necessary updates and changes to the DoD grant agreement regulations, the DGARs, right? We got the DFARs on the contract side. This is the DGARs on the grants and agreement side. And so in line with those updates to uniform guidance that were issued, we got a series of updates to the DGARs. And so this final rule, I've got the Federal Register number there at the top of the slide. The final rule was published back in August of 2020. However, the effective date is October 19th. And so the way that we should be seeing this kind of rolled out in a practical sense is that it'll be effective and starting to really come through on your awards that are issued on or after October 19th, 2020. The purpose of this rule was to fully implement 2 CFR 200 uniform guidance, because previously what DoD had kind of done when uniform guidance was issued in 2015, they basically said, we're going to, for an interim period, adopt the majority of uniform guidance for our nonprofit organizations, our institutions of higher education, and our state and local governments that may receive DoD grants. So they had this kind of interim implementation guidance, and lo and behold, it only took 5 years to finalize that, and that's where we are right now. And so they basically finalized the implementation of that. I think they corrected a lot of kind of redundancy in the regulation that was confusing at times, especially to organizations that maybe have received an award, and they look at the regulatory references that are in there, and then they go to the regulatory references and they look like maybe they're out of date. So it was always, really confusing to kind of navigate the regulatory framework of these things. I think they corrected that quite a bit. And so really this final rule removes 2 existing DGAR sections from Title 32, which is national defense, and it makes revisions to 4 other ones. For the sake of time, we're not going to be able to look at everything that this final rule achieved. I think it was like 440 pages in total length. But what we wanted to do was really focus on some of the really most important items that you should be aware of. And so this final rule removed the existing parts in 32 CFR for part 32 and 33. And so if you're a institution of higher education, a hospital, a nonprofit organization, or a state or local government or an Indian tribal government, these were the areas that had previously administered your grants and cooperative agreements from DoD. And essentially what had happened in 2014 is they had said, when the OMB circulars were replaced by uniform guidance 2 CFR 200, they said that we're going to suspend the use of these regulatory items in Part 32 and Title 32, but they never actually took it out of there. So some of the grants and cooperative agreements that were maybe issued in 2013, 2014, and they were maybe 4 or 5 year awards, they still had a lot of this language in there. And so you had to be able to go back and really look at, okay, what is applicable to our award and what is not? And so you could have had an award issued in 2014 that was subject to these parts here, 32 CFR Part 32, for example. But then you could have a very similar award that would have been issued in 2015 or 2016 that would then have the interim implementation of 2 CFR 200 in uniform guidance. And so it was very confusing because the regulation was in the rules, the administrative requirements were in 2 locations in the CFR. And so what they've essentially done with this final rule is said that, a lot of these legacy awards should be complete by now, right? We're approaching 5 years since, uniform guidance had been implemented. So what they're doing now is they're eliminating section, 32 CFR 32, which pertains to grants and cooperative agreements to institutions of higher education, hospitals, and nonprofits. And then also 32 CFR Part 33, which is for local governments, state governments, and Indian governments. And so essentially what this is doing now is basically saying, we're eliminating these things. Now your regulations are going to be contained in one place in Title II. And within Title II, DoD has its own series. So uniform guidance is 2 CFR 200 for OMB's guidance. DoD has implemented that guidance under 2 CFR 1100. So what you're going to find now is for your institutions of higher education, nonprofits, those types of organizations that are receiving these research grants, they're going to look and they're going to find their regulatory requirements now in these newer awards in 2 CFR Series 1100. And so if you go into the ECFR, and that's the way you navigate your regulatory requirements, that's how I recommend you navigate your regulatory requirements. Don't use the PDF printed copies. They're a nightmare to work with. You go in there and you go down to the 1100 series, and it'll tell you exactly which sections of uniform guidance you need to adhere to. Now, if you're a for-profit organization and you're receiving DoD, grants, cooperative agreements, research vehicles other than FAR-based contracts, right? Your regulatory requirements were always in 32 CFR Part 34, which is administrative requirements for for-profits. And so this final rule, while it eliminated Part 33 and 32, it had revised Parts 21, 22, 34, and 37, okay? We're only really gonna focus on Part 34 today because that's the administrative requirements for for-profits. But just for your reference, 32 CFR 37, for example, that's an area of the regulation that governs technology investment agreements, which is slightly different than a grant or cooperative agreement. If you have one, you would know, but there's only a few of those out there. The key revisions that we saw as part of 32 CFR Part 34, which is the administrative requirements for for-profits, I tried to cherry pick some of the most important ones here. It went in and it defined a new term, and the new term is small award. And so it defines a small award as a DoD grant or cooperative agreement or subaward. And so a subaward, keep in mind, would be essentially like a sub-grant, right? If you have an organization that's the prime recipient of a grant or cooperative agreement, they can then issue subawards or sub-grants to other organizations at a lower tier, right? We're not talking about contracts for goods or services. This is basically an implementation partner that will be helping satisfy the research requirements. So essentially, it's a DoD grant or cooperative agreement or subaward with a total value over the life of the award that does not exceed the simplified acquisition threshold, which is currently $250,000. Then it goes on to say that for small awards, DoD components may apply less restrictive requirements than the provisions of Part 34 when awarding small awards, except for those requirements that are statutory in nature, of course, required by law. So what we're probably going to see here, which is great, is, on the uniform guidance side, they've had the concept of things like fixed amount awards for a while. And fixed amount awards are almost like a fixed price contract, but it's a grant, okay? And so you have deliverables, you have milestones that you can meet, and as long as you meet those, you can receive payment under the award and not have to account for actual costs incurred. So I'm hoping that we're going to start to see, new flexible vehicles like things like that being used. And so this has really kind of laid the groundwork for, the DoD components to have these grants up to $250,000 in value and really scale back the administrative requirements that are going to be imposed on the for-profit recipients. Budgetary revisions. So as you know, if you've ever had a DoD grant or cooperative agreement, the approved budget is really kind of written in stone to some degree. There aren't contract line items. There aren't subcontract line items, right? There's no clins and slins that you have to, bucket costs into. But in general, you have to make sure that you keep the amount of cost budgeted for labor, for example, within the relevant range of what you originally budgeted. And they're gonna, and your awarding agency or your pass-through entity is gonna want to make sure that you're adhering to the requirements for prior approval when making budgetary revisions. And so, one of the things that they updated here, and this is in line with the last update that we just saw, the last revision we just talked about. Essentially, they updated the prior approval from a federal award that has a federal share of $100,000 up to the simplified acquisition threshold, currently $250,000. And so it's updated to read as follows. The transfer of funds among direct cost categories, functions, and activities for awards in which the federal share of the project exceeds the simplified acquisition threshold and the cumulative amount of such transfers exceeds or is expected to exceed 10% of the total budget. And so what they're basically saying here is if you have an award where the federal share is less than $250,000 now, you can move costs within the budgeted categories in excess of 10% of the total budget without seeking prior approval, okay? This is not something that would be allowed if this is a larger award, of course. If it's a $1 million grant, for example, and the federal share is $1 million, if you try to move cost between, say, materials and labor on that award, you're going to have to seek prior approval before revising the budget in that way. So this is just adding that much more flexibility for those lower valued, DoD research grants and cooperative agreements. And then the last one that I think is great because it's basically aligning the audit requirements for our for-profit recipients of these DoD research grants and cooperative agreements. It's aligning it with what the other folks are subject to under uniform guidance, the nonprofits and the institutions of higher education. And so it's taking your audit threshold now and taking it from $500,000 of federal expenditures to $750,000. So basically, if you have DoD research grants in you expend more than $750,000 on those grants of federal share within your fiscal year, you'd have to have a compliance specific audit around that award and around the requirements of 32 CFR Part 34. So this is basically raising that threshold up by another $250,000. If you're only doing a little bit of DoD research grants, this may be beneficial now because now you may be outside the audit window. If you're already, an organization that's still working on large projects, this is probably not going to benefit you too much because you're already probably way over the threshold, and you would probably know that, right? But really, this is, all these things I think are important for the for-profit folks to know because you're going to start to see these updates starting to impact your awards, moving forward, and especially in 2021. All right, so another thing that we wanted to really touch on was some pre-award considerations. So maybe you're going after your first DoD research grant. Maybe you have, you've done them several times. Maybe you have lessons learned. They didn't go exactly the way you thought it was going to go. One of the things that we see a lot of times, and for the sake of time, I tried to highlight an area where we see a lot of kind of confusion and figuring things out after the fact, is as it pertains to cost share. And so we can't emphasize enough how important it is to plan out your cost share, conservatively and really thoughtfully in the pre-award phase. Because once you commit to a cost share, if you're not able to achieve your cost share, in many cases, the pass-through entity or the DoD component is able to then reduce the federal share in kind. So if you come up 10% short on your cost share, they could reduce your federal funding by potentially 10% if they choose to do so. What we typically see is that organizations are always trying to figure out, well, what does this cost share, typically mean? And so commonly proposed items of cost share, and really what cost share is basically it's when an organization will incur costs that's either directly allocable to the project or indirectly allocable, right? Like allocable indirect costs from your indirect cost allocation structure, your indirect rates, right? That is not reimbursed by the federal government. but it is part of the budget. And so essentially the award ends up becoming somewhat of a joint venture between the federal government and the organization that's providing the cost share, right? And the percentages vary depending on the awards and the organization you may be receiving the funds from. But things to remember on cost share. So commonly proposed items are labor, right? Like your folks that are actually going to be working on the project. Allocable fringe benefits. If you have approved fringe benefit rates through, DCAA or DCMA, you want to make sure that you're applying those rates appropriately. Materials. So materials would be items that have an acquisition cost of less than $5,000 or a useful life of less than 1 year. There's an or there, right? So either of those could trigger an item being considered materials or supplies. Travel costs, if you're going to incur travel costs and use as cost share, ensure that it's allowable under your applicable cost principles. Real property and equipment. So real property and equipment, in the case of equipment, we're talking about items with an acquisition cost greater than $5,000 and a useful life of greater than 1 year, okay? And then allocable indirect costs. So don't only consider the indirect cost on your direct cost share that you are, basically counting. So if you have an individual who's going to be providing labor that is then going to be treated as cost share for the purpose of the award, also consider the allocable indirect cost as it pertains to the federal share. Because some organizations, what they'll do is, say they have a $100,000 federal share on the award and then a $100,000 cost share. They may exhaust the federal share with all of their direct labor or direct materials or other costs. However, under your cost allocation system, you still have allocable indirect costs that can be applied to those direct costs that exhausted the budget, right? So keep in mind, allocable indirect costs, whether it be allocable and not recoverable on the federal share or allocable on the cost share, either can be treated as cost share, okay? And so a lot of times this is kind of a little, kind of piggyback you can dive into. If you've already exhausted the full budget of the grant with a lot of your direct costs, you have allocable indirect costs, but there's no more federal share to fund it. Consider counting that and seeking the approval to use that as cost share on the award as well. Valuation, you want to make sure when you're developing your proposal and you're considering other items, right? I mean, all the things that we talked about on the prior slide, valuation is going to be driven by your cost principles. It has to be allowable, allocable, and reasonable cost as if they were reimbursing you dollar for dollar. Valuation for other types of things gets a little bit more gray. And so you want to make sure that when you're considering these in your proposal effort and committing to a cost share, that you understand how they're going to be evaluated. So valuing services from other employees, so maybe employees from partnering organizations that you may have, they should be valued at the employee's regular rate of pay plus the applicable fringe benefits and overhead. It's almost like a subcontractor, if you will, being treated in that regard at a cost reimbursement basis. Valuing volunteer services. So the volunteer services should be recognized at rates that are consistent with those paid for similar work in your organization, right? So if you have a volunteer that's coming in to do administrative services or clerical activities, things like that, what do you already pay folks within your organization to do those types of activities? That's how you would value that cost share on your proposal. Valuing property that's donated by third parties. So the value of this shall not exceed the fair market value of the property at the time of the donation, okay? Valuating donated space shall not exceed the fair rental value of comparable space as established by an independent appraisal of the comparable space and facilities in a privately owned building in the same locality, okay? So it gets a little bit more complicated when you've got excess space, you want to donate for use and contribute that towards the project. Want to make sure we're valuing that, appropriately. And then the last, really most important consideration for cost share is the acceptability criteria. You don't want to be towards the end of your research grant. You want to be towards the end of the project when you start having to answer questions from either the DoD awarding component or your pass-through entity as to whether or not the cost share should even be considered acceptable as incurred and proposed. And so you have to meet this acceptability criteria. It has to be verifiable from the recipient's records. This means your organization's records. So Gene is going to get into a lot of this when we get into the post-award in the next block here. But essentially what they're basically saying here is think of these costs as costs that are being incurred in a cost reimbursable situation, you're just not going to be seeking reimbursement for it, but you are going to be claiming credit for it. So you want to make sure in the case of things like labor, right? We should have some kind of labor distribution to quantify percentage level of effort and things like that. For things like procurements, we should have procurement files, invoices, purchase orders, contracts, things like that to demonstrate that cost. The second item there, they should not be included as contributions for any other federally assisted project, right? So we can't count cost share on two different projects. And really, if you do attempt to do this, it's going to get caught during your annual incurred cost submission anyways, because you're only going to have so much cost to allocate to the different projects that you're working on Schedule H, if you're familiar with that submission. So don't try and count cost share in two different projects. The same cost, that is. Necessary and reasonable for the proper and efficient accomplishment of project objectives. So this really comes down to, if you remember, we were talking about allocability on the last slide. It has to be necessary and reasonable in order to, in the furtherance of the project, right? It can't be an unrelated cost that you incurred. Number 4 would be that it's allowable under your applicable cost principles. So allowable under FAR Part 31 or 2 CFR 200 subpart E, depending on the entity type. So, when you think about the organizations you may do business with on your projects, you've got for-profits that would be subject to FAR Part 31 cost principles. And then you potentially could have nonprofits or universities, institutions of higher education, that would be subject to the 2 CFR 200 subpart E cost principles. So make sure it's only allowable cost. Also, the cost has to not have been paid or reimbursed under another federal award, obviously, right? We can't claim costs and seek reimbursement on another federal award and then claim it as cost share on the current project. It has to be provided for in the approved budget when approval of the budget is required by the DoD component. Oftentimes, this is pretty standard. You will have your award that will have, basically what you intend to commit as cost share. And this is where these pre-award considerations really come in when you're developing that cost share budget, if you will. And then number 7, a really important thing that comes up quite a bit. If we're talking about real property equipment, whether it was purchased with the recipient's funds or donated by a third party, they must have the grant officer's approval prior to counting it as cost share. And the value is not to exceed the depreciation or reasonable use charge, okay? If you feel that the full value of the equipment is going to be exhausted during the project period in question, then you have to seek prior approval to using that full value of the equipment as a claim of cost share. Typically, the only thing that's going to be allowed is your depreciation, as you would normally depreciate your capital, or in the case of something that's maybe fully depreciated, potentially a usage charge or something like that to recapture some of that cost. And with that, it leads into post-award considerations, and so I'll turn it over to Gene.
Hey, thanks, Dan. So if you haven't figured it out so far, Dan is the brains behind this, and I'm going to talk more about the execution of all of this. So you can jump to the next slide. So we're talking about post-award considerations, and the first thing I'm going to throw in here is the standard Form 1408 pre-award checklist. And the reason for that is that the items listed on the SF 1408 are a really good starting point to find out if your current systems, your current operations can handle all the regulations. And so this lays out a handful, I don't remember the exact number, maybe 14 or so items on here, maybe about 20 that we need to look at. The first one is that your accounting system complies with GAAP or CAS if you're a CAS entity. Most shops will comply with GAAP, but if you haven't been regulated in the past, maybe you've slipped in some areas, and particularly if you're not a publicly traded entity, there may be some cleanup needed in that area. The rest of this gets into more really cost substantiation type requirements. And so we need to be able to segregate the direct costs from the indirect costs. We need to be able to identify and accumulate those direct costs directly to the contract. So unlike a commercial project or a commercial business where you're building to stock, here we need to know that the costs are hitting that particular contract or grant. We also then on the indirect side, we said earlier, we're collecting those indirect costs, but we need a way to allocate those costs to both the intermediate and the final cost objective, the contract. So that has to be consistent as well. So we're looking for a system that can collect the costs and then build logic and rules that will allocate those costs across multiple objectives, but consistently across them. And then, of course, there's the costs directly hitting the general ledger that needs to be captured. So to create all of those costs, to find out where they're coming from, you, of course, need a timekeeping system that you're clocking time, your employees are clocking time to the final cost objective. That could be a manufacturing order that's tied to a project, that could be directly to a project, could be to some form of a work order, or some form of a service order. Once that time is captured, and we're looking at all time, so we're talking about total time requirements, we need labor distribution that can then distribute those costs to the objectives. And that also means that if we're doing total time and you've got hourly employees that are, or others that are paid overtime, you now need a labor dilution capability in your system as well. Of course, we need to post costs to general ledger. So that, the SF 1408 says to do that on a monthly basis. Most systems do that more often. But of course, during the closing, you need to close your books on a monthly basis, and during the closing, any indirect costs typically need to get posted. Direct costs are often posted, depending on the system, but posted immediately to the GL. Dan also mentioned allowability. So your systems need to be able to identify and exclude unallowable costs, or the inverse, identify and only include allowable costs. That'll hit your expense reporting system as well as your labor and material costs. Costs need to hit the contract line and subcontract line item. This does depend, of course, on how your contract is written, how many CLINs or SLINs you may have, and of course the cost needs to hit the appropriate item in the contract, which is often captured using a WBS structure on a project. And then pre-production and production costs need to be separated so we can identify the engineering or IRAD type work versus true build work. Okay, next slide, please. A couple more on here are directly listed on the SF 1408, and then there's a few others that I added in that are typically looked at to ensure that your system is adequate. So the first few in here, you need to be able to track limitations on cost or limitations on funding. So this kind of goes to the budget conversation that Dan was going through. So we need to make sure we're not exceeding funding. And then your system, your accounting system, is going to flow into your estimating system. So you need to capture accounting project information that you can then use in the future for solid estimating or pricing follow-on work. Then the next bunch of these are not necessarily directly listed in the SF 1408, but we know you need these. You need a strong internal control environment, framework, and organization structure. So while you may have built out a great accounting system, some of you might have installed SAP or Oracle, some are maybe running QuickBooks, others are on Excel. You need to actually control those systems. You need to control the policies and procedures. You need an internal audit structure. You need an actual framework and organization to support all that and keep it operational. The next item, the ability to calculate indirect cost rates. Dan also mentioned this. So being able to capture the costs is one thing, but generating the cost rates and then the allocation structure, you need a consistent method of doing that. That can be done on Excel. It's hard. It's hard to maintain consistency, but smaller entities do it. And then a lot of the big ERP systems will support this. Also need to reconcile your billing. So we've got to be able, you'll see reconciliation happening in a couple here, both your billings from your cost accounts and cumulative amounts, as well as your subsidiary ledgers to your general ledger. You also want to see your project ledger to your general ledger if you're doing that. If you run two ledgers, you need to be able to reconcile your time to your labor. So these reconciliations are very important, particularly if you're running systems that either have multiple ledgers or you're running multiple systems. They need to integrate. And then the last couple on here, journal entries need to be approved and documented. And then we talked a bit about the internal reviews and audits to ensure compliance. Let's jump to the next one, please. So what does this look like when you're actually capturing cost? Some systems have kind of three versions of cost. You have an organization, so you need to capture who is creating that cost or spending the money. You need to capture the what. What is being spent? Is it labor? Is it travel? Is it professional dues? Is it allowable, unallowable? And then finally, you need to capture it to a project or contract that we talked about. Let's jump to the next one. So what does this look like? You're capturing labor, you're capturing subcontract costs, you're capturing indirect costs, you're capturing material costs, and you're pulling all of that together. You're burdening it, you're adding allocations, and that creates your total cost. So this involves a lot of different systems. It's going to hit your inventory system. It's going to hit purchasing. It's going to hit timekeeping, expense, labor and labor distribution, and all that flows together typically into an ERP system. But there's some adjustments here, particularly if you run as a commercial entity. You need to be able to do those allocations. You need to be able to do the labor distribution with total time. Let's jump to the last slide. I think we're cutting close. So basically, post-award, to be able to substantiate costs, the SF 1408 gives you a pretty good guideline. Of course, you don't need to wait until post-award to look at that 1408 because you will look at it pre-award. That's going to tell us what's required. You need a bunch of systems or processes to help capture the cost and allocate it to the final objective. You need a strong accounting system. You need strong manufacturing if you're running manufacturing orders and capturing costs to them. You need inventory so that you can track your materials. You know which parts go to which project and the cost that is involved in those. You need a purchasing system that's going to capture your subcontract costs as well as any purchased costs. A strong timekeeping system to capture total time for all employees that are hitting this, the grants or contracts. An expense system that captures allowable and unallowable. Of course, your labor distribution to take your time and convert that to dollars and bring it into the accounts and projects. And the final, of course, is a system that captures your projects so you know what costs are hitting which project. You need all those systems, and then the integration of those systems will allow for that cost substantiation. So you can track back from the bill or from the final contract all the way back to the details of each of those costs, and then also use that for estimating in the future. You need the control over those systems to make sure that you can continue to substantiate your costs. So that control includes both the audits that we talked about, the policies and procedures, as well as actual control over your IT systems to make sure changes aren't happening without test or uncontrolled changes. So I think with that, I believe that's the last slide we have. And and I'd like to open it up to questions.
Yeah, awesome. Thank you very much for the presentation. I mean, as a National Manufacturing Innovation Institute, I know some of our finance team is on the call here today, and they deal with a lot of these matters on a day-to-day basis. I think some of the other institutes are online as well, so they know very, very well some of the things that were presented here. So thank you very much for that awesome presentation. Again, if you do have questions, please submit them via the chat function. We'll try to get to them, but I do encourage you also to reach out to these guys offline. You see their contact information on the screen here, so don't hesitate to reach out to them. We do have a couple questions that came in the time that we have remaining, gentlemen. So I know at one point you guys said, you want to wait until, I think it was related to cost share, when you said, you want to wait until you're most of the way through the program or the project to start worrying about that. But at what point do folks need to start worrying about all of these regulations? Is it from the outset, like from the planning period, or once you're awarded? When do we need to really start taking these into consideration?
Yeah, that's a great question. I'll take a stab, Gene, and then you can let me know if you want to jump in. But, what I can tell you is from our experience working with, a number of different DoD consortiums, a lot of DoD contractors, a lot of nonprofit recipients as well. If you don't do the due diligence on the front end, you may not like the award you win. And so, the kind of the cautionary tale there is by looking at the SF 1408 checklist, looking at the adequacy for system criteria there for a cost reimbursable type of, funding arrangement, for thinking about things like cost share and whether or not we can meet the commitment based off the way we've currently valued our proposed cost share. These are all things that should really be considered, once you've identified the funding opportunity. You know that you're going to go after a new funding opportunity. You want to participate in a project, but you want to make sure that it's a project that you're going to want to keep. And so that's, my real, kind of word of caution is that during the proposal phase, during that planning phase, there's a lot that can be done to make sure that it's successful in post-award.
Yeah, and from my view, what I tend to work in is the cleanup side. So I'm often brought in to help fix the systems and clean up the mistakes that were made earlier. And I'll tell you, it's a lot easier to do it up front. It's a lot easier to get the systems and processes in place rather than try to clean it up later. The systems, sometimes what we see is an evolution with companies. We see a growth where they start to get into either government contracting or grants, and they get a little surprised by some of the requirements, and then they try to cobble together solutions with Microsoft Access and Excel, and soon find that those are unsupportable, and they become, they start actually risking their award, and that's, that's when I end up there to help clean up the mess. It's better to work on this up front, though. But,
understood. Sounds like Gene is the wolf from any Pulp Fiction fans out there.
right.
So there was another question that came in, and you don't have to answer this whole thing, and hopefully we can connect you guys afterwards, which is from one of our industry partners. That do you guys offer or support contracts administration? And was curious about your fees involved. You don't have to speak to the fees, but do you guys do that kind of work? And if there are fees involved, can those fees be applied to an award, or is that a separate deal altogether?
Yeah, no, that's a great question. And, we're talking about DoD research grants today, right? But I can tell you that Capital Edge's pedigree really was born on commercial government contracting, FAR-based contracts, DFARS contracts, ADAR, all of the, FAR supplements as well. So contract administration, I would say, is really Capital Edge's majority focused, actually. And the DoD research grants and agreements from other organizations is kind of a, basically what we discovered was a complementary area of expertise, because most of the organizations we worked with had both. They had research and development going on, as well as, providing services in the context of a commercial contract. So there's a number of different ways that we can support commercial government contractors and grant recipients alike. Those first 5 slides of our presentation really give a good, kind of overview of the key service areas that we operate in. But we're a smaller firm that's agile, and we can adapt to pretty much any kind of project need that an organization may have. So that's kind of my 2 cents. Go ahead, Gene.
Yeah, and I think to sort of piggyback on what Dan was saying about how the firm started, the firm existed starting to help other companies maintain compliance. And then a few years ago, 3-4 years ago, when I was brought in, was when we started to realize how much the systems are required to support the contract administration side of it. And that also is really a complementary area to sort of our core expertise. And so what we try to do is help companies become compliant, start out compliant, remain compliant, and put in the processes and systems, as well as the policies and procedures to support their current government contracting environment, as well as their strategic objectives, their growth objectives. So we do a lot of kind of structuring type work to help companies make sure that if they want to grow in the government area, do they set up a separate company, or do they set up separate organizations, or how do they manage their accounting so it impacts their commercial side less or more potentially. So yes, we can absolutely support the contracts administration side.
Awesome. So I can make that connection afterwards, and again, encourage folks to reach out to these guys directly as they know what is going on in that space. If you're challenged with contracts administration or grants administration, please do that. So we have reached just about the end of our time here. So again, I want to thank everyone for joining today. I want to thank Capital Edge, number 1, for their membership with Lyft, and number 2, for their willingness to participate and share their insights today. I think it was very helpful for everyone. And on behalf of Lyft, thank you everyone for joining. Please stay tuned for our next webinar. We actually have one coming up on the 28th of this month with Pilot Systems to talk a little bit about the technology that they're working on going into autonomous vehicles. That should be a fun conversation as well. So thank you very much, everyone. I'll let you get back to the rest of your day, and we will see you next time.